Yo, how's everybody doing? This is Mr. Anderson, True Crypto 28 on Twitter. Just jumping in for a quick market update to kind of go over some things that we spoke about before. Obviously, you guys know for the most part that I've been traveling a lot during what I would consider high time frame chop. Of course, we've seen a significant either shakeout or sell-off, however you want to put it. They would both be correct. Well, we don't know if the shakeout's correct, so I shouldn't say that. Certainly, a shakeout implies that a sell-off is coming and obviously has come in dramatic fashion, which we've seen. And we'll kind of jump into that a little bit. I don't want this to be a long video, but I'll touch on various different things just to kind of give you my thoughts on what's occurring. I do want to go back in time to this Wyckoff post that we had in video and things we talked about. And I'll read a little bit to you, but obviously you can read it right there. But it says, while everyone loves to post schematics to get a lot of likes, most of the people are committing a fatal mistake where they assume it is phase B and then draw what they say will now happen in phase C, D, and E. In other words, don't assume what's going to happen in phase B, C, D, etc., nor should you assume where you're at. I'm going to talk a little bit about that in a moment, but let me just kind of go a little bit deeper. It's hard enough to predict the next move, let alone the next 3 moves, so this causes bias, and having a bias often leads to significant losses. Our TA should only be used to help us find edge in what happens next, and that's always the key element for me. What's next, right? Not what happens and then happens after that and then happens after that and the counter, because so much more information can come in, I should say, and change things, etc. In reality, we're just looking at the data that's occurred and hoping that it can give us some insight to what then follows. It says we should realize that many accumulations are failed distributions. Many distributions are failed accumulations. The point is that what will happen is not already written. Once we establish that, we understand and respect all that as the far more essential realities for our trading, then I don't mind telling you that my current lean was that we're in a reaccumulation that shows some level of a sign of weakness and then provides a spring to reverse course. So here's the interesting thing. Now, another thing I'll point out is that, I don't know if I have this here or not, but I think so, right? This is something I always speak about. I spoke about it that time too. I just happened to find this one by looking real quick. See this, it says the one thing I would teach people, you guys have heard me repeat this like a broken book about Wyckoff, is never say this is or was phase C, and instead we should always view it as this is this or was this phase C. So I'm getting chopped up on my own words here, but the point is, what does that mean? Well, the difference here is that in something along these lines, if I'm doing a labeling of Wyckoff, you guys don't know Wyckoff, don't worry. You'll still be able to pull some elements out of here. I'm not labeling this as C, right? And let me make this a lot bigger. So this makes, oops, what am I doing? Settings, there you go. I'm not labeling it as C, exclamation point, right? I'm labeling it, when I do label it, as C question mark. Why? Because I know it's open for interpretation. Now, the benefit of doing this comes in the fact that you can find elements within a schematic where you might say, well, wait a second, regardless of the phase I'm in, if I could be in B, I could be in C, etc., I might be able to anticipate a rally, right, from lower limits, right, without having to actually be correct on what phase I'm in. And that's kind of the idea and the element here, is that, okay, well, we might say, well, regardless of whether I'm in distribution or accumulation, it's likely that if I take this level and give it back, I'm probably going to reverse down, obviously, to the median or lower limits again. And that is what being flexible gives you. It gives you the ability to make trades that are accurate and correct, to be correct in terms of directional bias, which is the most important thing in trading, right? No matter what people tell you as an active trader, what matters most is, was I correct about direction? Immediate direction, meaning the next direction, right? So let's just say I had an opinion here, if you happen to see my mouse moving, and I thought that we were going from here to here. Well, if I shorted in this, somewhere in this area and it only went to here, guess what? I probably did well, right? If I began longing here and I thought we were going to make new highs, but we only went up to here, I probably did well, right? Same thing if I happen to long back here again. Even if I'm expecting huge new highs, it doesn't matter. Once I got back to top side here, I'm probably in a good position, top side of the range. Reverse down, etc., spring, whatever. So if I happen to be, the only point I'm making is that directional bias, if you happen to be right on that, is what's going to be beneficial there. Now, why does that matter? Well, because instead of, so for instance, we talked about this previously. Let me just grab some random horizontals, clone it. You know, we could say, hey, top of the range, lower range, etc. Now, at one point, we're looking at kind of like this. You could draw it a few different ways. Something like that is fine. You say, okay, well, this was the bottom of the range. Right here, we wicked down, came back up here, held higher. You can draw it however you want. It doesn't really matter. The point is you guys can see we have a range. Okay, well, back here, we spoke in this tweet, right, that I expected something. This is exactly where we were in that little box. And I expected something along these lines, right? Now, what you hope in that situation is, I mean, we got the bounce, very playable and nice, but once you get up here, you want to see it hold this region, if not hold over here. We talked about that. Like, hey, if you start peeling back, there's certainly a problem, right? Well, that is why being open, especially inside of a range, to being right and wrong is a benefit, right? Because you don't marry the idea that, no, I am 100% right and it must be this way. No, not at all. And what we began to speak about is like, well, what if we're in a much bigger range? What if we should be looking at this on a weekly scale? In fact, we spoke about this way back here. You remember when we did a Wyckoff video back here and I said, the timeline here is now becoming so large because this was a huge range that no one likes to talk about. You never hear anyone discuss the fact that we basically sat in a very similar situation to what we're seeing at the moment, assuming we don't break down, last year, just back in 2023, right? I mean, this is a significant stretch. This is actually, you popped up in this level, let's call it range high in April the 10th, and it didn't break until October. I mean, that is a massive range, right? We went to the low, back to the high, several weeks of rejection, back to the low, couple different tests, and then finally broke on through, and we saw this massive advance. Well, we've always known there was going to be a time that this needed to be digested. Now, could this be distribution? Well, it's definitely distribution on some time frame, right? There's no doubt about that. But when you look at it in this high time frame, the picture still looks very good, right? If this was a daily chart and you saw this, you wouldn't be that scared at all. Now, you might be saying, oh, well, I'm seeing this level. I might even see top side back here. All those make a lot of sense, right? And then, of course, added FUD, elements that come in. It's Germany, it's this, it's minor capitulation, it's Mt. Gox FUD. I don't really care too much about those details. I mean, I listen to them, I pay attention, but most of all, I care about the chart, right? Well, we need to see where this weekly is going to close. That's going to be a key factor. But the reason I bring this up is that now, instead of saying, well, wait a second, what we thought might have been C on the daily, perhaps we're just seeing B on the weekly, which would mean that some idea of this could still be possible, right? Maybe this was all part of a B. Maybe we're way back here. Who knows? Now, I would say like maybe this was all playing out because this is one hell of a big range. And this would be something more the lines of you're hoping now to see something bought up here and some element of a spring. But a spring, you know, you look on a 5-minute chart and a spring might take 6 candles, right? Well, when you're looking at a weekly chart, that's 6 weeks, right? Let's go back to actually this example where we were looking really good on the daily, which is right here. I know I'm bouncing around, and for people that don't know anything about this, it might be confusing. But there was a time where this right here was looking great, right? That, hey, we might have actually seen this. Of course, we never then leaped up and held, which is, of course, the main element that you have to see. You now have to see new buyers coming in at this level for you to take the leap and break the range. That never occurred. But it was looking damn good as a spring at one point. The old jump across the creek, maybe that's what just occurred, etc., etc. But the reason why you really are looking to trade in D and E, which means you broke the range, that's going to be key. Well, a lot of people might say that, oh, you just broke the range. Well, chill out. Maybe you did, maybe you didn't. But the point is that the reason why you're looking to trade after that is because of what we're going to talk about in a minute. But just to stay focused here, what I wanted to show you, remember, we broke this level right there or right here, whichever one you look at. sprung back, actually held, by the way, we held under it, closed under for the day, next day, didn't get it back yet. It was actually a second day later that we saw a pop. Oh, okay, nice. So that's good, but how long did it last? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. That's a big 15 days before the biggest spring candle that came about. 16, 17, 18, 19. Then the 20th day, the other quote unquote spring-like candle. And then if this would have held form and then went again, no one would have ever doubted that, hey, yeah, that's the spring, right? So the point is, this gets very confusing, especially when you look at a high time frame. Because if we're going to envision the fact that maybe that's going to occur on the weekly scale instead, well, you got to realize that you're coming in, down, about. Where's this going to go? Does it hold this particular level? That would be nice if it did, a little bit easier. Is it going to rally back before Sunday's close? We'll see exactly where we end up and how ugly this candle looks. And then is there going to be absorption here during this time? Or is big money going to utilize the whole, Mount Gox sales and Germany sales and all these things as a place to absorb down at these levels? Well, if they did, then that would coincide with this kind of element of, hey, the phase C that you're looking for. But we do have to keep in mind that that could take many weeks, just like we saw on the daily scale, that it took 20 candles. I mean, it doesn't have to take 20. It could take 2 or 3, but it could certainly take 6 or 8 or 10. So this could play out over a long period of time. That's why I say be careful with the schematics. Don't put yourself in a position where you're just so clued in on a schematic. Schematics can be very confusing because what time frames are we looking at? Well, I would say that there's a damn good argument. I made this argument back here that we better be focused on the weekly scale, right? Why? Well, look at what's taking place. I mean, this is a dramatic advance from just by looking at what's, even just drawing something so simple and just kind of taking a look at the entire move thus far. I mean, what have we've never once even lost the 0.23 of the entire move, right? Now, you say, oh, you lost it now. No, the week's not closed. Let's see. Maybe we will, right? If we're sub 59.4, let's say, then yeah, we will be below that particular level. But the idea is that this thing actually has not even seen a significant drop. Now, would you measure it this way? Not exactly, but that's not the point. The point is that on this scale, the trend looks pretty awesome. Now, you bring it down to a daily, and you might say, well, wait a sec, you just lost the 200s. There's a lot of elements here that are scary. I get it. I get all that. But what I also get is that Bitcoin has a tendency mid-cycle to have distributions, and make no mistake, that's a distribution, right? There is a distribution on some time frame going on there, right? But we often see those distributions end up being shakeouts, right? Do I have that shakeout tweet? Let me see. Probably not. I don't want to waste too much time getting it right, but we talked about this a couple weeks ago where, I started seeing this, like, oh, yeah, so this starts to look like an absolute shakeout. If I can find it real quick. It's not a big deal or anything, but I know what happens. Some people watch these videos, they think you're bullshitting and think you might be making something up, which I don't. I'm very against the people that are playing let's make things up, right? So there we go. And by the way, I'm far from always right. I certainly haven't played this well at all. Of course, I've taken many vacations, etc., but I haven't been crushing it on the downside, even though I posted this on June 18th, right? When price drops, just explain everything. What is a shakeout? When price drops sharply, causing less committed traders to sell, the goal is to trigger panic, increase selling. After the weaker traders exit, the price often stabilizes or rebounds as stronger traders buy at lower prices. So that's what I was just speaking about. I do lean to that as a primary. Now, I'm going to be open to whatever is possible, but I'm certainly going to lean towards absorption in this level. Now, does that not mean you can't get further 10% flushes, even bigger than that? You can. I'd probably welcome it, but yeah, it does start to bring on some different elements. Where would I be concerned? I know I'm jumping around, but it's sort of intentional so I can actually keep this video shorter than most of them are, because my intention is not to be very long-winded today. Where would I be concerned? Well, we already made it somewhere down here, just pretty basic. Like if at some point we start seeing some kind of daily scale rejection, let's see, this one wasn't pretty, looked ugly, looked like we were set up for some ugliness, but if one of your what's the word I would be looking for? One of your preferred oscillators starts topping out, as an example, and it's a rejection in that 200 range. It's a rejection of this previous range, something along those lines. Anything like that, yeah, that would be more of a concern, right? We see a flush, it tries to absorb, it tries to come back, but it's sort of weak, and we see some rejection again of that previous zone. Ooh, man, that would certainly change my mindset. I'm not gonna lie to you, it's not anywhere near my primary, but maybe I'm just completely missing it. I'll tell you what will happen though. I'm a type of guy, which you guys know and people that have been around for years understand, that if something like this happens, regardless of the fact that I'm not seeing it, I'll be short. That's for sure, right? If I have to. It's just by nature, I would have to be that way. But anyway, we'll jump back to that in a bit. That would be the element of concern. I'm focused more on the fact like, oh, okay, well now instead of the daily scale look that I was having before, let's go into what we talked about many moons ago, that, hey, maybe we need to look at things more on this weekly scale than anything else. And if that's the case, the idea will be, well, will this level hold? We'll find out. If not, there's other levels here. Obviously, it starts getting a little freaky, but we have to give this room to see how much absorption there is before week's end, and then how much willing absorption there is next week, the following week, etc. Might we have some more scare tactics, flush outs, Mount Gox news, things of that nature? Absolutely. I will say this for the guys that are trading on different time frames. By the way, suddenly on the weekly, doesn't look so terrible. Now, when you go to this weekly scale, you got range high, this was your range low, this was your bounce. Now we come back to this level, we're literally already hanging out there. So from this point till Sunday night, there's a bit more buying than selling. It's not going to look that bad. That's an ugly candle, but I don't like to look at candles days before the close. So at the moment, it's pretty ugly. You'd like to at least see it finish somehow as an inside candle or something along those lines. That would still be weak if it was on the lower end. But let's just see where we're at, and then we'll kind of play that out as it comes across. But I do want to show you this. So anyone that tries to trade somewhat in the way that I trade, I don't have any magic in what I do, right? It's not super complicated. First and foremost, I have a couple moving averages, right? So if we're on a low time frame, not even low, 4-hour time frame, medium-term time frame, what would we have been looking for, right? Well, certainly there would have been some weakness here and scare in this area, right? As we see green under my pink, both under the red. That's always scary. So I'm looking for rejections in there, which didn't really come too much, but you've seen there was ways and reasons to play this down to the downside, which we kind of anticipated, and then we anticipated that we would have some element of a spring, or at least a spring attempt, right? In this case, it was a failed spring attempt, but it did certainly spring, and that's a huge move. We went from 56 all the way up to 72,000. That was a massive move. But then we started to see this weakness come into play. In fact, for those that use my tools, right, what do you see happen here, right? You come in from green, okay, took some shots here maybe. You might have tried some longs. It didn't go anywhere. Then you immediately turn back red. This is a short. This is definitely a short. This is definitely a short. This was definitely a short. This was definitely a short. This was definitely a short, although it tried to roll over here, etc. But you were below the 200. So if I'm below the 200, see, the idea with moving averages with me, I look at them a few different ways. If I have a pair of moving averages that I'm looking at that are, small and mid, ideally I want them to be above the 200, right? So you want this climbing as we go on. But in this situation, not only did we fall back to the green below the pink, we also lost this 200 here. So this has been very ugly, right? Very clear cut downtrend. There's just no other way to look at it. A straight bleed, right? She's been bleeding out. So when I got a little flash here on the 4-hour on this green, are you really interested in that? No, because it's a significant hidden bear. You're still well below the 200. A lot needed to happen for that to roll over and change. So that's kind of the idea here, all red across the board. Anyway, I didn't play it that much, to be honest with you. So my plays were minimal, so it's not something that I was taking advantage. But this is kind of the basic routine structure and strategy that we teach, or at least talk about. And it's still done well when you're looking at a 4-hour time frame, which for me is my most common time frame that I'm trading anyway. So even within the high time frame chop, there are certainly ways to play it relatively effectively. Obviously, alts have been crushed. But that was necessary. I mean, if you could take yourself out of the equation for a little bit, right? Just take yourself out and put yourself into a position where you say, all right, well, let me kind of just remove my own thoughts, my own failures and success, everything that's taken place. Realistically speaking, did this need to happen? Well, of course it did. I mean, we went on an epic run, right? And then when you look at it just in terms of moving averages and structure and things of that nature, I mean, it still looks solid. I mean, you're still in a good spot here. I mean, you would normally, again, if you weren't looking at this on, utilizing the mind of something where I look at the price of Bitcoin every single day, and instead you just brought up a chart and you saw this, you would say, oh, well, look at this. I'm ranging, I'm higher, ranging, higher again, another break of structure again. Over here, I'm ranging. Maybe this range is going to fall back to top side over here, etc. So yeah, something like that. If it's going to happen, it's going to happen. It is what it is. But at the moment, literally, it's just held the top of the range. There hasn't been too much negativity to look towards this, other than what you would consider a natural pullback that's probably necessary to digest and, like we say, provide a transfer from from weak hands to strong hands. So I would expect an element of continuation. Now, there's other things that are in play. Who's going to win the election? How's that going to play on crypto? Is this guy going to drop out of the U.S. election and provide another Democratic candidate an opportunity to win, which would then change all the positivity that people have had lately in thinking, hey, the Republican guy is going to win. He's okay with crypto. That's going to be good for crypto. Or are the Democrats going to keep power, surprisingly, where we didn't expect that, and now we're in a position to where they're not going to be friendly to crypto? So there is some uncertainty there as well. Again, I'm a charts guy above all else, but you can understand a lot of the reasons for the recent uncertainty, where it went from, all right, it looks like a close race where one guy was clearly pulling ahead, and now it's like, well, actually now he's so far ahead that the other guy might pull out, and they might be able to pull out another candidate that has a chance, and that creates this little bit of worriness. But anyway, it is what it is. Those are just a few things. Let me see if there's anything else for me to talk about at the moment. I don't really know. No point in kind of going too deep into alts right now. What I would look for is some element of a spring in general on any chart that I'm looking at. I don't have one in mind to show you, but just look for some kind of, I don't even know if you need a sign of strength. You would just at least, before even considering something like longs, I am a show me something person, right? So let's just go back in time here, right? So we had a break of structure, big jump up, and then suddenly it starts to hold, right? Okay, so then at that point, you could have somewhat of an interest. On the much lower time frames here, you could have said, oh, okay, look, I'm breaking down further, range out, and then start to climb, right? It showed me something, but still, you even get into things like drawing trend line. Is the trend line something that's hugely significant? No, it's not. But the whole point is, if you don't at least break this, right? Like, so at this moment in time when this was happening, if I didn't at least break this, how could I have had an interest? If I go to lower time frames, if I'm looking for something even shorter time frame, then I might have been looking at something like this getting broken or whatever it might be. But my point is, until at least that occurred, how could anyone have been uber bullish when you can't even break a simple trend line? Now, does that mean everything? No, because I can show you a trend line break. I think this broke, right? Let me look at this. That's why I tell people, don't fall in love with trend line breaks. Yeah, so this broke. So when you see something like this, you definitely don't want to see it take the trend line and then give it back again. So from this moment on, you knew there was some weakness in there, right? But the reason I bring it up is like, well, at least start with that, right? So in this case, I would look at this, and this is going to be so tight because it's been terrible. But even if you wanted to bring something in, I don't even know if I can draw this with a straight face, but something like that at a minimum, right? Again, there were reasons why you could have taken some shots on some very low time frames, but on this time frame, at least show me that you can crack this, which is the bear momentum, right? So crack this bear momentum first, and then at that point, if you can crack that bear momentum, I do want to see that there's some stabilization at that point, excuse me. Where do I have it? Okay, so let's just say finally it's goofing off. It breaks above this level. You want to see it show that it can now have a desire to hold wherever it does hold, and then finally make an attack on that next trend line. Still, you would just be starting something. Really, I think it needs to get back over like at least 60 to start feeling some thoughts of like, oh, okay, maybe we're okay here. But that's kind of the idea of what I look for. Otherwise, anything else I'm doing is just really kind of short term, meaning I'm watching and taking in the new data. I'm always taking in the new data, but meaning if I don't have, I'm not going to get a long bias right here and keep the long bias. I need new data to come in that helps me maintain a long bias, right? Otherwise, I completely understand people that are keeping a short bias, right? Especially if it really shows weakness where it can't go on and you start getting these things topping out, right? So by the time this thing gets back up here, you certainly want it to gain something. If not, then you have to worry about a reset, right? So once these guys start to reset again, so sometimes they can survive these a little bit because you're looking at different time frames, but some of these higher time frames, they don't do so well on the reset, right? So something like this has certainly made a big jump up here. But what did it gain? What did it gain by getting way up here on this 12-hour time frame? Well, nothing. I mean, literally reset to reset. I went from this level to this was the low at the point, and it only made it back to the 0.38. So from reset to the low, back to the next reset, and price was rejecting the 0.38 of that particular move. No bueno, right? There was clearly weakness there. Now, when I say clearly, I don't mean like, oh, 100% it's going to drop. What I mean is there's going to be some edge to looking for reasons to short in that environment. So that's kind of where I would be at to see, all right, well, these low time frames are going to try to build on something. Potentially, you might have to go all the way down in like a 15-minute and say, all right, can it build anything? Well, it's going to take some time. You can see the 15 is still underwater here, right? But it's fought pretty well. Now, can it make its way back for a bullish reset? Hold a level, and it needs to take off. You are seeing rejection coming in there. It's not what you want to see. You want to see this thing pop back up again, get itself a nice little run again, and then come back, and you would like to hope that it holds pretty well on these lower time frames if you're looking to play longs. Maybe you're not looking to play longs at all. I'm just making a point to say be careful, right? So you're not putting yourself in a position where you are suddenly bullish long on the on some mid time frames. Why? There's no purpose at this point to do it until it shows you something. That's just my opinion. You might have your ways. If you have some ways to produce edge in doing it, then so be it. But allow it to at least show me something like, hey, take a horizontal level back. Take some big candle back, right? You guys know me with my big candle theory, right? So whether it's on this 15-minute chart as an example, if I have a big break of structure, well, that's the level I want to see it take. Well, guess what? It literally failed at this particular candle. So not the end of the world, but I certainly want to see it take that level. Now at this point, it needed to take this candle right here. I'll show it to you. So we broke down, ranged. I would have liked to see it at least start by taking that one. I've shown everyone this a million times of how I do these things, so I'm not starting anything different. So the fact that it recaptured, okay, so at least you broke some backs here of some people that got in really late, and at that point, these people are a little bit buried. You want to see price hold, and it did a very nice job, right? I mean, this has actually been a pretty decent little bounce, 53.3 to 57 and change. Not bad in the context of what we've seen overall, no, but on the low time frame, not bad. And that would have started with something along these lines where I say, okay, well, I want to take that level. Okay, I did. I see it try to hold. It's holding up top side over here on the momentum oscillators, great. It keeps going again, great. But now when you start getting to the higher time frame, we're not seeing it yet. It just hasn't happened, right? So something on this time frame, even this had a break of structure that was decent, but this is 2 consecutive. I like to see it range out first. So yes, it did fine with that. So this, again, it did some work there, which was pretty good. Nice little sideways action, and then one little more leg up. But ultimately, I'd rather see it take that level, right? And of course, that's a level reject that, meaning on this time frame. And I will climb the mountain as we do it. So if I get that one, I'm happy with it. I'm going to then say, well, let me see a 2 hour. Oh, that one happens to be the same one. Let me see a 4 hour. Is that one something different? Where are we at? 4 hour would be same area, so that's good. So this is a big one. That's where that actually rejected, is that 4 hour right there. It needs to reclaim that level, and then if it does, you alleviate some more pressure, and that's kind of the idea here. And I'll just be scaling up as they go along during this process. And of course, you want to see how interested are buyers? How interested are they at every level? Do they maintain their interest as it begins to climb, or are they just doing a short-term trade? See, there's a difference. You'll often have value buyers. If it's just straight value, then let's just say we know the future and that it's going to stop here, meaning it's going to be stopping action and we're going to accumulate. Well, if that's the case, then value buyers will continue to buy down in this level, but as things get up here, not so much, right? They rather have the cheaper prices. They don't feel like it's going to immediately bounce back. They want to absorb more down here. And you'll see some form. It doesn't have to be a sideways rectangle like that. It could be slightly tilted. It could be a little wild. It doesn't matter, but you'll see some elements where you begin to see more accumulation at the lower levels, more absorption at the lower levels than anything else. So anyway, the moral of this the point of this particular video was what? To focus on the fact that, like, well, first and foremost, no matter what, anytime we're using some element of Wyckoff, we're not predicting the next 14 moves anyway. We're always open to different elements of, hey, what time frame are we working on to begin with? Recognizing that we can not only be wrong at any point, but we should expect to be wrong on any trade that we're in. That's how you actually master an element of trading, by saying, no, I'm prepared to be wrong and I'm wrong at this level and I'm out at this level. That's always a key. But also open the mindset to, like, okay, well, look, in this situation, perhaps we're just working on a higher time frame and we shouldn't fall in love with the schematic element. We should focus more on support, spring and test, things of that nature, and focus on the fact that, like, oh, okay, they're not going to look like these schematics, so therefore we might have some different variations of how this can play out. And again, as I mentioned, on that weekly, it still has a relatively good chance to actually play out like a reaccumulation on Wyckoff. We'll have to see how that plays out. But again, at the moment, definitely clear distributional elements to it. And it would be silly to not recognize that. Those distributional elements, though, I would say are more on those lower time frames, daily time frame and below, and not necessarily the weekly just yet until we lose some kind of level. But even on the daily, if you wanted to get concerned about that, I think you would have to say, realistically, this, like, no, this was the level that set the low. So we always like to do this. We like to say, no, this set the low. Why did that set the low? I don't get it, because this was the last real consolidation. I mean, does this one count? It's 5 days. Well, that's where trading gets a little tricky. Is this a proper range, or was this part of the extension? Right. So if this is one extension and then this is a last consolidation area, well, then this even was pretty short, to be honest with you. So really, we could look at something even like this. We even had a failure and everything built in. So, and then a big extension. So that's how a lot of people get themselves caught up. That's why I say, obviously, there's nothing more important than looking at price action and market structure. But even that can get very confusing, because we can fall in love with the fact that we say, oh, break of structure, a little bit of range, break of structure, slight range, break of structure. Okay, now this is the structure that needs to hold. It broke, we're dead. Wait a second. If we're dead, why do we just pop up to 72? You know what I mean? Then it comes back the other way. Well, in my sense, if we're going to look at these higher time frames, or even now the daily, I got to say, well, big extension, big pullback before a massive bounce. So now this is my range low. Can it break? Yes, it hasn't broke yet, even on the daily on close. We still haven't lost the range. But I would be concerned now if we lose the range, play down in this range down here, and then, I know this is a little repetitive from earlier, the video went a little longer already than I expected, but then see some gradual movement back to the range high area where we get rejected. And that would be like, oh, okay, I guess we still want to go a lot lower. Not good. Any type of flush out in the meantime that's just driven by fear, not too worried about it. I would assume there's not a lot of new, fresh, high leveraged longs that are being taken by experienced traders that that have a real big game plan in place. I would say that most people are wise enough to understand that, no, this has been a pretty straight bleed, and we're in show me something stage. Like, show me something. But even this, where we just talked about earlier, I won't draw it here, but we had this big leg down, big candle theory, right? If you just look right here, perfect rejection is what we saw of the single candle. So you see mother candle, child 1, 2, 3, 4, 5, 6, 7 with the rejection. So you go big mother candle, ugly, not too much of a pullback. Excuse me, it didn't really reclaim much there at all, intra candle. And then we saw the range out of 1, 2, 3, 4, 5, 6 consecutive days, all within that candle. And you know how I would do this, right? Would be first find out where my rectangle is. Okay, something like that. And 1, 2, 3, 4, 5, 6, 7 with the ugly rejection, and then a straight bleed out. So I think that's it for now. I didn't want to go too much further. If you guys have some direct questions, you can pop them on Discord or something like that. I'll try to answer them. But I know people were looking for my thoughts. My thoughts have been patience, right? That's been my overall theme while we've been grinding out in this nastiness. Is just be patient, right? I couldn't have been more patient in that I said, well, although, by the way, I could have done much better. I could have been shorting this the whole way. If I was doing that, then I'd be doing great. I wasn't doing that, so I want to be clear about that. I was, as you guys know, most of you know, I've been on multiple vacations and things of that nature. So for me, it was just a time to kind of chill out. So I mean, it still had some options. At this point, I did see it as a real possibility that we could begin to hold these levels, grind out, and take off, right? Didn't happen that way. Okay, when the market shows you that, all right, well, what's next? I mentioned over here that, well, if we lose this particular level, we're probably going to peel all the way back to that range low. And that is exactly what took place. So in this scenario, I was open to longs, but once she shows you something different over here, oh, well, I guess we're peeling back to range lows. And that's kind of how she played out. Especially here, once you see a rejection here, it's like, oh, wow, this is really getting nasty. I mean, it couldn't do a damn thing. It couldn't even recover one candle. There just hasn't been an interest. So that would be, by the way, a good starting point, right? When is the last time it recovered a candle? Let me look real quick. And I just mean any type of break of structure of the previous, just not even the structure of the previous candle, right? So breakdown. So it needs to break this candle. Nope. So we go 1, 2, 3, 4, 5. So now this is a new break. Nope, nope, nope. So wait, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. By the way, this all becomes some weird range where you're now intra range of the range. I know it's lower than this one right now, but because when I wick out, I still start extending that range, even though I get these weird looks here. But we're about, I forgot, lost count, 15, 16, 17, 18, 19. Finally lose it here, meaning where you have a break that closes below your lowest wick that was trying to hold on to something. So yet again, did you recover that? No. 21. Then we already went over this again, but that would be 22, 3, 4, 5, 6, 7 tries, rejection, 8, 9, 30, somewhere between 28 and 32, considering the fact that apparently I don't count very well, since taking a candle. So what does that even mean? That means that at some point, what we would need today, I'm going to get rid of all this now so I can draw this out, is that if it were today, I would need this to close above this candle. That's not going to happen today. So then some point tomorrow, you would want a close above this candle right here on close, right? Whenever that occurs next, although that's not that great of an accomplishment, it would literally be the first time that it happens in at least 30 days, right? So whether that's tomorrow, the next day, a week from now, etc., we'll just keep adding it up. But that's how bearish it's been, that we have not been able to break anything. Not even, again, normally what I'd be looking for is specifically to see a break. I like to take the break of structure candle itself, the one that actually broke the previous structure, and like to see that level taken as like a starting point on that particular time frame. So in this case, it'd be the daily. But what I'm saying is I'm taking that a step further, and I'm looking at even within those legs down, we haven't taken a candle. That's how much of a dump off this has been since this point. Not one time has that occurred, which is impressive. I mean, that is one hell of an impressive move down for something like that to take place. So it's definitely been a sharp sellout, but that's how you shake people out. That's how you shake out weak hands. That's how you start a new run. I don't think BlackRock Company came in to keep this puppy into a new bear market over the next year or two. It would certainly not make a lot of sense to me in my mind. But I've been wrong before, but I just don't see that at the moment. Happy to be wrong. I'll be the first one to publicize it on Twitter. Like, man, did I get this wrong? But ultimately, where I've, if I wanted to congratulate myself a little bit, is that I've shown a lot of patience throughout this boredom. That's something that took a lot of time to figure out, many years of trading, to where it's like, hey, you know what? Maybe I'm not killing it and making a fortune during this time, but it's a good time to spend some time doing some other things, which has been my focus, and that's good. So that, yeah, I'm in a position now to be ready to take advantage. So should we, one, close this week back above this particular range, yeah, I'm going to look for reasons to long. Maybe it's going to have to grind itself out, but I will begin that process of opening my eyes to any longs as long as we don't see some big flush outs. Same thing on some of these other time frames as well. If I should lose it on this weekly scale, then yes, I will open my eyes to saying, all right, well, anytime a lower time frame is becoming exhausted, so if I even on, I know I told you that I want to see a daily come back and reject that. That is true, but if I see something like a 4 hour, as an example, let's just say we have another flush, the weekly clearly loses particular range on close. Now, of course, on these next resets, so that would mean that this rolled over, we close the week, I come back in, we see some kind of effort that kind of looks like it did something, but when we look at the structure, it really didn't. In that situation, yeah, I'm going to take that exhaustion and I will short it. And I'll be happy to talk about that on Discord now that I'm back anyway. But my point is that, yeah, once we break that level, lower limits and things of that nature on close, I do have to be open, of course, to new shorts because maybe there'll be some massive flush out that occurs. But otherwise, if I now hold the level, well, on a very basic level, of course, we like to buy supports, right? And we like to sell resistance, right? So if a support holds, especially on a high time frame, of course, I'm going to now go to lower time frames and say, hey, can I find some edge-based reasons to take some longs? And that will be my next thought process. If we should maintain the push that's trying to go on here on a Friday afternoon into the weekend and close at a level that at least holds it. Again, it's hard to give that direction now on Friday before the close, before the close of the week, I should say, because I just don't know where we're going to end up. So I don't want to give everyone the go ahead and say, hey, start looking for long, because look, this could close in that position. And right now it's about a few $100s off from where I would want it. In fact, I would prefer this, I'll just be clear, to actually close above, let's say 58,340, right? On the weekly, for me to say, oh, okay, now I am going to look at some of these low time frame longs, etc. Doesn't mean I won't take one or two here or there anyway. But what I'll do is I'll talk about it on Discord so that everyone's crystal clear on what I'm thinking. I just don't like to give such instructions because I've done that in the past where someone misinterprets it. Oh, I started looking for longs. I'm 20x longs. Like, oh my God, settle down, guys, right? So let's just see where we're at. Hopefully you guys kind of have a good understanding where I'm coming from with that. By the way, let's just look at this weekly. When you start looking at something like this, I mean, on the weekly scale, this has been a pretty damn nice reset on this weekly RSI here, right? So, I mean, you talk about this level. So we grounded out here. We haven't seen any hidden bull from the last pivot area, but think about how low this is. We were down at 25.8. Was that the close area? About 25.8. So you went from 25.8. Right now we're in this 56 range. We're about double, right? So price is about double, and RSI is nearly exactly those levels. So I would like, if this was like a daily chart or something like that, 44.81, you would like to see this give you that below 44.81. But in reality, here's what happened, so everyone understands. Especially if we do a little time replay, you'll see that this actually, whether it hit it or it went below it, I saw it right at the level. Or maybe it went below it, probably did. When this was down at the 53 and change level, you actually had a situation where now RSI had dipped below that level, right? Showing some element of a hidden bull divergence, while price was 75% higher. And that's a hell of a reset to go through, right? So you had the similar reset, except price had still gained 75%. That's pretty significant, right? That's a significant element there. In same type of thing here, you say, okay, well, we came in a little fakey, but we're not done yet. Deeper, but here we are in this deeper element. So you're not going to have a hidden on good old FSR, but you do have another full reset. And again, price is about double, right? So let's see where we close the week. But from a weekly scale, although it moves slow as can be, doesn't look all that bad, right? You're in a pretty decent spot here at the moment. But again, you have to be open to the fact that, of course, if we start going lower, top side, of course, becomes an area that makes a lot of sense. This also makes a lot of sense, right? We almost got there anyway. I would actually, when I draw these, I'm always going to go top of candle. I mean, this is such a minuscule little range here. We say, oh, I barely topped for a week, etc. So how much I put into that? Not a whole lot. But if you then lose that level, of course, I'm going to just scroll down to that next level and say, hey, top side loss over here. By the way, you remember how ugly this looked when we stretched out and you reject it? This did not look good at that moment to have such a rejection. And then she still accumulate, took off, right? So don't make too much out of any one candle. But the idea is, on this high time frame, I have to still be open to the fact that, no, this was a shakeout, right? That's where I started this particular video. To say, when I said on June 18th, I expect a shakeout. Well, if that's true, if I end up being correct, then it makes a lot of sense, right? There was a lot of FUD that came in, etc. But let's see. I'm open for both sides. Again, I don't like to act like Nostradamus or anything. Only after the fact. After the fact, I like to act like Nostradamus and be playful with you guys. But other than that, that's just to piss off the other people online. Hopefully everyone's good. Drop questions if you have it. I'm out for now. Take care of yourself.